What is going on, guys, and welcome back to the Young and Intelligent Money Investing channel. Today we are doing another episode of the $0 to $10,000 challenge. And if you guys haven't watched any of these episodes before, we're talking 0 to 1,000, 10,000 on the portfolio, basically road to 10,000, and then road to 10,000 subscribers on the channel. So kind of just following up on the growth of both the portfolio and the channel going forward. Before we get into the updates, I just want to ask you guys to please take a second, drop a like on this video. Doesn't cost you guys anything and really helps out the channel. I'd really appreciate you guys. Also, drop a comment below how your investments have been doing over the last few weeks with this big sell-off and then kind of comeback that we're going to talk about today. So, portfolio over the last week, we're up 3.4%. Over the last month, we're only down 1.29 or 1.26%, which really isn't that bad, honestly. It's more of a bad month. Kind of peaked up at the last 3 months, up 9%. Now we're only at 4%, but it was kind of a healthy correction, and stocks have been rebounding really nicely over the last week. Pretty much positive every day since we hit this bottom. We haven't really suffered any setbacks yet, so there might be one coming up, but honestly, nobody really knows when we're talking about the future of the stock market. We could see another 10% correction. We could see another 10% surge. Who really knows? I'm just going to stay invested and hope my positions keep growing over the long run. And we're going to go through some of those right now. So we're going to kind of do these a little bit quicker just because you guys have seen a lot of these positions before and not much has changed down below. And I kind of want some advice as to what you guys think I should change in this portfolio. Just because I'm thinking about selling off some of these smaller positions to move it more into the bigger ETFs like VYM that I really like for the future. And just kind of some stocks that I don't follow quite as much that I probably shouldn't have in my portfolio just because I'm not keeping up on them super well. So let's start out with VOO. You guys know Vanguard S&P 500 ETF, 0.04 expense ratio, probably my favorite ETF, but I need to have some more money into this. I'm up 12.3% on it, 1.8% dividend yield, not much to share there. Same thing with SPY. Up 12.74% on this, bought these about at the same time, VOO a little bit more recently. And this has been a really successful position of mine, being one of my biggest equity positions, and it's really performed well for me. I'm pretty happy with 12.74% in less than a year, so that's a great return overall. And overall, the portfolio's returned a little bit less than that at 11.57%, and that's all right. Really, that kind of comes down to SPHD kind of lagging what we've gotten from the return of SPY and VOO. Only up 1.22% on total return on equity, but that doesn't factor in all the dividends we received, so that return is really going to be much bigger than what we see. So another one, QQQ, been doing great on this, up 12.9%. Not much to see there, it's just NASDAQ, tech stocks, so you guys know that index. Same thing with Dow Industrial Average here. I'm up 18% on this one, so this is going to be one of my bigger returns for the ETFs, maybe the biggest. 2.1% dividend yield. You guys don't forget the DIA does pay out that monthly dividend. So then we have SPHD, which we talked about. VYM, the high yield dividend ETF from Vanguard, only 0.07 expense ratio, I believe it is, and it pays out quarterly, but it does not include the REITs, so that's really what I like about VYM. Kind of gives me some diversification from the heavy real estate portfolio that I have right now. OUSA, if you guys saw the video I made the other day on OUSA, we know this has a really high expense ratio, but it's also a good index of stocks with high quality, high dividend yield, and low volatility stocks, so that might be something you're into, and I've gotten a good 6% return on this in not too big of a time frame. And also it pays out monthly dividends, which is nice. STIB, another monthly dividend ETF. This one is a global ETF, and I'm down 1% on it equity-wise, but I've been getting those dividends every single month since I've owned it, so really I'm up overall in this position. We have AbbVie. You guys know AbbVie's kind of been my champion. It's been my biggest performer, up 15% in the last month, a little bit off its high of 123, but my total return on this is almost 80%, which is just fantastic. By far my biggest return in the portfolio, and I'm hoping to ride this to even higher highs, which would be great. Up over $100, just on about a $120 investment. Now Berkshire Hathaway. Berkshire's dipped a little bit over the last month, not week, but It was up to close to 220. Now it's sitting around 205, so it might be a good buying opportunity for them. You guys know, if you saw the numbers that came out recently, they've been loading up on Apple shares. So that'll be interesting to see how that plays out. There's been a little bit of criticism from people like Jim Cramer on Berkshire loading up on so much Apple, but it's really performed well for them in the past, and I'm hoping it does in the future. So next we're going to talk about Apple naturally. Down today, but I'm still at 14% of my position, and that doesn't even count. Well, I sold it very briefly. I sold and bought back in the same day, and so I bought it originally at 146, and then sold, bought 2 shares, sold 1 more share at 151. Really should have held onto that in hindsight, but that's all right. Still performing well. AMT, I believe. Oh, just back to positive on this one. This one's been kind of up and down, pretty volatile, being a REIT. Over the last few months, the REITs have really performed pretty poorly for me, but it has been giving me 2 quarterly dividends, and that dividend has been rising, as you guys can see, from 66 cents to 70 cents per share for AMT. I'm a big fan of AMT going forward, and we're just going through a cycle of rising rates, and that's what's been hurting the REITs. So, which is kind of why I want to maybe sell off something like SUI, or APLE, something like that. Pepsi, you guys know Pepsi. I'm down a little bit on this one just because of how much this thing's been fluctuating. Really been a tough sell for these kind of beverage companies to be rising in kind of the environment where people want to be a little more healthy with their drink choices, not really have those sugary drinks. So it'll be interesting to see how this one plays out over the long run. Next we've got Realty Income. This is the monthly dividend ETF that I like. Down about 10% on this, has been absolutely crushed over the last month. Last 3 months, really. Last year, really had a tough time. Still up 40% over the last 5 years, but had a really big down year. I'm hoping this rises back up to its kind of 52-week average, more about like 55, something like that. Next, SUI, manufactured home community, some communities. I'm down 7% on this, as I was talking about. REITs really have been doing pretty poorly over the last few months, and that's what this is. Hopefully that rebounds in the long run. Starbucks, I also believe I'm down on this position, about $8. Yeah, this one's been tough. Starbucks has been having a few disappointing earnings reports. So sadly, I'm down on this position, and it's hopefully going to rebound long run once again. Stag's one of my... Wow, I'm down on Stag now. Stag must have been doing pretty bad over the last few months. Yeah, down 14% over the last few months. I actually bought this when it was low and it had a big spike and I haven't even been paying attention to it because it's such a minor position of mine, but it does pay out monthly dividends, which is nice. I've been getting this 24 cents, 23 cents every month over the last about year. Then we have Bowsen. Bowsen's been super volatile for me. If we just look at the chart, been super up and down 1.3% in the last month, and I'm down overall 4.8%, and it was down 6% today. About hoping that pans out in the long run. That was more of a stock tip for me. I don't really know too much about the company, so probably not the best decision to get invested in it, but it's all right. BAC, this is a good position. I'm up 30% on this. Really wish I would have put more into BAC, considering the financial sectors are going to be pretty successful over the next few years as their revenues and profits rise with these rising rates. So that's definitely something to consider when you're thinking about opening up a new position in an individual stock. Maybe one of the big banks would be a good option due to these rising rates, because that kind of makes it easy for them to boost revenues, which have really plummeted or pretty low because of these low rates, and so they can't charge as much on interest. But when those rise, then they're producing more revenue, and while they're going to give some of that back to the people who have their money in the bank, really not that much is being given out to their actual people who are customers, basically. So that'll be interesting to see over the long run in the next few years with these rising rates, or if they're actually going to keep raising the rates by the Fed. APLE, Apple Hospitality, last one we're covering here, down 3% on this, and have been getting monthly dividends. That's why I hold it, and so I'm probably up on this position overall. Not really a huge deal, and it's just a monthly dividend ETF that I like to hold. So that's the portfolio right now. This has been our chart. So really big downward spike and then straight back up. So it'll be interesting to see if this dip comes back down, or if we're kind of good and set for the long run, going to rebound to our high levels that we got to. I'm really pretty pleased with how this has gone over the last year. I'm about 10 months in on Robinhood investing, so I'm really hoping that this continues that we have our bull market, just so we can keep getting those good returns, but not to the point where it's unhealthy and we're due for a big crash. Now, if you guys want to look over at the channel, I'll kind of get this off the screen. We will look and see how we're doing. We're up to 622 subscribers as of right now. Channel's looking pretty good. I think you guys have been enjoying the videos, even though I haven't been able to put out quite as many lately. Kind of been putting this into different little playlists and stuff like that. And now if we can hop over here on the social blade, if this will load up for me, there we go. So 622, we've been getting some solid growth, averaging about 7 subscribers a day. About 250 views average a day. It's been dipping a little bit lately just because I haven't been quite as consistent with the uploads. And basically 200 views for me will get me about 11 hours of watch time. And so that's really the amount I try and hit, because you need 11 hours of watch time per day in order to hit that 4,000 hours of watch time in a year. So it's about that in order to hit that monetization. I'm hoping to beat that by quite a bit. I don't want to have to take a whole year to be able to monetize my channel again. But honestly, we'll see. It's not really a huge deal with the monetization, just because it's not super big numbers. It doesn't make that much of an impact. It'd be nice to have, but at this point, until we hit that 4,000 mark, it's not really that big of a deal. Like, it's not going to be that much money coming into the channel. So I hope you guys have enjoyed this video. I'm going to ask you guys to please drop a like down below once again. It really helps out the channel. Pretty much all the videos that kind of get put in the YouTube algorithm and kind of get picked up and get regular, consistent views are ones that you guys really support and throw those likes on early, and kind of gets consistent views over time, just because YouTube sees that as a good video and wants to recommend it to other people. So that's all I've got for you guys today. If you enjoyed this, drop a comment down below. Tell me what you do with my portfolio, and I will see you guys in the next one. See ya.